Ever wondered what the do's and don'ts of investing are? Well, let's embark on a journey to unravel that mystery. The world of investment can be daunting, but it's also a treasure trove of opportunities. Unearthed correctly, it can lead to wealth beyond imagination. Today we're going to shed light on some key do's and don'ts every investor should have in their arsenal. Are you eager to navigate the investment labyrinth with more confidence? Ready to become a savvy investor? Let's dive into the do's first. So, what should you do when investing? Great question, let's dive into it. The first thing to remember is that investing is not a game of chance. It's not about throwing your money at the stock market and hoping for the best. It's about making informed decisions. And how do you make informed decisions? Research, my friends. You need to understand what you are investing in. What does the company do? How is it performing financially? What's the general market sentiment? These are the questions you should be asking. Remember, knowledge is power. Next, we come to a term you've probably heard 1,000 times: diversification. If you're thinking, yes, don't put all your eggs in one basket, well, you're not wrong. But let's put a fun spin on it. Imagine you're at an Easter egg hunt. You wouldn't just search in one corner of the yard, would you? The same principle applies to investing. Spread your investments across different sectors, industries, and even geographical regions. Diversification helps to balance the risks and can potentially maximize your returns. Speaking of risks, let's not forget about risk tolerance. Not everyone can stomach the ups and downs of the stock market, and that's okay. It's important to understand your risk tolerance and invest accordingly. You can't enjoy the roller coaster ride if you're too scared to open your eyes, right? Lastly, let's talk about strategy. It's easy to get caught up in the excitement of the market, especially when you see those green numbers. But remember, investing isn't a one-night stand. It's a committed, long-term relationship. You need to have a clear strategy in mind. Are you looking for growth or income? How long can you afford to keep your money invested? These are the factors that should guide your investment decisions. And here's a bonus tip for you: patience. Yes, it's not just a virtue, it's an essential trait for an investor. The stock market is not a get-rich-quick scheme. It takes time for investments to grow and yield returns. So, buckle up and enjoy the ride. To sum it up, when investing, do your research, diversify your portfolio, understand your risk tolerance, have a clear strategy, and be patient. Remember, investing isn't a sprint, it's more of a marathon. Continuing with the DUs of investing, let's delve into the realms of risk tolerance, patience, and portfolio reviews. These are not just fancy phrases thrown around in the finance world, but are fundamental pillars that can make or break your investment journey. Understanding your risk tolerance is like knowing your spice level before ordering the spiciest curry at your favorite Indian restaurant. You wouldn't want to end up with a scorched mouth, right? Similarly, knowing how much risk you can tolerate in your investments can save you from financial heartburn. It's all about balancing the potential for reward with your ability to weather the storm if things don't go as planned. Now, let's talk about patience. Patience isn't just a virtue. In the investing world, it's a bona fide moneymaker. Investing isn't a get-rich-quick scheme. It's more like planting a tree. You don't just sow the seed and expect a fully grown tree the next morning, do you? No, you water it, give it sunlight, and wait for it to grow. The same principle applies to investing. You invest, and then you wait. Remember, Rome wasn't built in a day, and neither is a healthy investment portfolio. Lastly, let's not forget about the significance of regularly reviewing your portfolio. It's like going for regular health checkups. You wouldn't want to find out about a problem when it's too late, would you? Similarly, reviewing your portfolio helps you identify any underperforming investments early on, allowing you to make necessary adjustments before it's too late. So, in a nutshell, understanding your risk tolerance is like knowing your spice level, patience is your secret weapon to making money, and regular portfolio reviews are your financial health checkups. And just like that, investing becomes a lot less intimidating, doesn't it? So, those were the do's. Now let's move on to the don'ts. Now that we've covered the do's, what about the don'ts? First up, let's talk about the pitfalls of following trends blindly. You know how in high school everyone wanted to wear the latest fashion trend, even if it was neon leg warmers? Well, investing isn't a fashion show. Following the latest investment trend without understanding it is like wearing neon leg warmers to a black tie event. A serious fashion faux pas. In the world of investing, this could mean a major hit to your wallet. Instead of hopping onto every trend, do your research. Understand what you're investing in and why. Next, we have emotional decision-making. Investing is not an episode of your favorite soap opera where decisions are made in the heat of the moment. It's more like a game of chess, where every move should be calculated and strategic. Making emotional investment decisions is like declaring checkmate after your first move. It's premature and likely to backfire. So, no matter how much a stock's dip makes your heart race, or how much its rise makes you want to jump in joy, keep your emotions in check. Make decisions based on facts, not feelings. Finally, investing without a plan. Imagine going on a road trip without a map. Sounds adventurous, right? But what happens when you run out of gas in the middle of nowhere with no gas station in sight? That's what investing without a plan can feel like. It might seem exciting at first, but when you're stuck in a financial rut with no plan to get out, it's not so fun anymore. So, before you start your investment journey, map it out. Know where you're going, how you'll get there, and what you'll do if things go south. Now let's put all this together. Imagine you're at a party. You see everyone wearing neon leg warmers, so you decide to put them on too, even though you don't really like them. Then, you see a cute pair of shoes and buy them on a whim, even though they're way out of your budget. Finally, you leave the party without any idea of how to get home. Sounds like a disaster, right? Well, that's what investing can look like if you follow trends blindly, make emotional decisions, and invest without a plan. Remember, the goal is to make money, not to follow the herd. Keep your eyes on the prize, and don't let the noise distract you. Because at the end of the day, the most fashionable thing you can wear is financial independence. And you don't get that by following the crowd. You get it by making smart, informed decisions. So, the next time you're tempted to invest in the latest trend, make an emotional decision, or invest without a plan. Remember this: investing isn't a popularity contest. It's a journey to financial freedom, and like any journey, it requires a map, a calm mind, and a clear vision. Remember, the goal is to make money, not to follow the herd. Continuing with the don'ts of investing, let's talk about the elephant in the room: fees. Just like a pesky mosquito at a summer barbecue, fees can be small but annoying. They can take a significant bite out of your potential earnings. So before you invest, ensure you understand the cost. That includes transaction fees, fund management fees, and any other charges that might be lurking in the fine print. Ignoring fees is like ignoring the fact that your car needs gas. It's going to stall your journey sooner or later. Speaking of journeys, let's discuss the expectation of quick profits. Investing is a marathon, not a sprint. If you're expecting to turn a quick profit, you're setting yourself up for disappointment. It's like deciding to run a marathon without any training and expecting to win. Sure, you might have a burst of energy at the start, but you'll quickly find yourself out of breath and wishing you'd prepared better. And while we're on the topic of preparation, let's talk about the importance of diversification. Putting all your eggs in one basket is a strategy that's as risky as it sounds. If that one investment doesn't pan out, you're left with nothing but a basket full of regret. Diversification, on the other hand, spreads the risk across multiple investments. So, if one doesn't perform well, others might still hold up. It's like having a team of superheroes. If one falls, others are there to continue the fight. So, don't ignore fees, don't expect quick profits, and don't neglect to diversify. These are the don'ts of investing that can help steer you away from potential pitfalls and toward a more secure financial future. And those were the don'ts. Keep these in mind, and you'll be on your way to becoming a savvy investor. So, those were the do's and don'ts of investing. To recap, it's all about patience, diligent research, and a clear strategy. Don't forget the golden rule: never invest in something you don't understand. Remember, it's not about getting rich quick, but about growing wealth steadily over time. Making informed decisions and learning from your mistakes, that's what it's all about. Remember, investing is a journey, and in this journey, always keep hustling. Until next time, folks.